Welcome investors. In this video, we are going to cover about anchor unlocking. Anchor investors have been allotted shares pre-IPO in most of the last year's listings. Anchor unlocking will result in selling of shares by the anchor investors after the cooling period of 1 month. This video is brought to you by Smart Investor. Subscribe to our channel, like and share our videos. In this video, we will focus on 12 stocks that we will see their anchor lock-in period end in January after recent IPOs. In December, 12 IPOs raised 168 billion from primary market investors. Of these, 9 listed at a premium to the issue price, while 3 began trading at a discount to the IPO price. Anchor investors in all the 12 issues are allowed to sell the shares in the month of January when the lock-in period ends. What happens when an anchor investor exits? Nykaa, Policybazaar, Paytm were down for 5 days after the lock-in period ended. Nykaa stock was down 2.5% 5 days after the lock-in period. Policybazaar was down by a massive 18%. Of the 10 stocks where the anchor lock-in period ended in December, 7 were down in losses. 76% of the IPOs between January and October 21 experienced shelling pressure on the expiry of anchor lock-in. In this video, we are covering 12 companies which have come out with an issue in December where anchor lock-in will happen in the month of January. Star Health, Tega Industries, Anand Rathi Wealth, Shriram Properties, RateGain Technologies, CMS Info or MapMyIndia, Metro Brands, Medplus Health, Data Patterns, HP Additives, Supriya Lifesciences, CMS Info. Star Health had largest issue last year, issued at 900, currently trading at a discount. Anchor investors hold 6.2% stake in the company. The lock-in period ends on January 7 and we are expecting the selling pressure to continue. Star Health is the largest and well-spread distribution network with 779 health insurance branches spread across 25 states and 5 UTs. Star Health can leverage its dominant position in the retail health insurance segment and grow stronger. Rakesh Jhunjhunwala is the promoter in the company, owning a 15% stake in the private insurance company bought at 155 rupees per share. The share had a high of 940 and a low of 753, currently trading at 772 levels. Tega Industries shares listed at a sharp 60% premium over issue price of 453. The company manufactures and distributes specialized critical to operate consumables for the global mineral beneficiation, mining and bulk solid handling industry. Company's focused end customers are mineral processing sites involved in gold and copper ore beneficiation. The anchor lock-in period for the stock ends on January 7. Anchor investors own 6.2% shares in the firm. If the anchor investors sell, the price could come down, an excellent opportunity to buy around 500 levels. The script was trading around 600 currently, had a low of 545 and a high of 767. Anand Rathi, this stock listed at a 6% premium to IPO price of 550 and has gained 20%. QIB portion was subscribed 2.5 times. Institutional investors saw 25 times subscription. Retail investors saw 7.76 times and employees put in 1.32 times in the IPO. Anand Rathi Wealth focuses on HNI segment, its presence in non-convertible market linked debentures and its focus on value added services. Anchor investors hold 8.5% of the shareholding allocated, who will be eligible to sell their shares from January 10 onwards. The share is currently trading around 650 levels. Year high is 654 and a year low of 542. RateGain is a software services company in the hospitality and travel industry, mobilized 1,335 crores through its IPO. The IPO received 17.41 times subscription, institutional investors 42 times, QIIs 8.42 times, retail investors 8 times. The company has issued shares at 425 per share. Company raised 600 crores from anchor investors, a 13.2% allocation to anchor investors. Shares of the company listed 20% lower than the issue price, and anchor lock-in ends on January 14. RateGain has recently published results which were above market expectations. In the case of a deep correction, investors can wait for anchor exits and buy at lower levels. The scrip had a year high of 411 and a low of 297. Shriram Properties on the realty sector had a disastrous listing, falling 16% on listing and now trading at a discount. It is part of the Shriram Group and one of the leading residential real estate development companies in South India. SPL has a total portfolio of 35 projects in ongoing projects, under development and forthcoming projects aggregating 46.72 million square feet of estimated saleable area. Anchor investors hold 13.4% and they are likely to start exiting from January 14th. Investors can avoid this scrip in the short term. The scrip had a low of 80 and a high of 106. CMS Info MapMyIndia saw a great demand from investors and the offer was oversubscribed by 154 times. NIIs had put in 424 times, QIBs had 196 times, retail investors 15 times of subscription, issue priced at 1033 per share. MapMyIndia, given its leadership in digital mapping, strong entry barriers, robust profitable data and tech platform, along with consistent financials. Anchor investors have a 5.7% stake in the company, which can be sold after January 17th. Any dip in the price of the scrip should be considered as a good buying opportunity. The scrip had a high of 1,876 and a low of 1,282, currently trading around 1,750 levels. Metro Brands, the footwear company, listed at a discount to the issue price of 500. Issue received a blank response less than 4 times, institutional bidders 8.5 times, HNI 2 times. The retail quota was hardly subscribed. Company caters the footwear needs of customers through a wide range of branded products for the entire family. Some of the popular brands are Metro, Mochi, Walkaway, Da Vinci and Fontini, as well as certain third-party brands Crocs, Checkers, Clarks, Processum and FitFlop. Anchor investors have a 3% stake in the company. The lock-in period ends on January 17th and we expect the price to fall further. The company had a year high of 512 and a low of 426. Medplus Health is a retail company in the pharma sector, had a strong listing. The company mobilized 1,400 crores. The issue got subscription of 53 times. QIA subscribed 53 times. HNI subscribed 85 times and the retail portion got subscribed 5 times. The company has 20% market share in organized pharmacy retail with a network of 2,165 stores spread across Tamil Nadu, Telangana, Karnataka, West Bengal, Odisha, Andhra Pradesh and Maharashtra. The scrip has listed at a premium and has zoomed 41% over and above the issue price. Anchor investors will be waiting to exit as their lock-in ends on January 19. Any dip in price should be considered as a buying opportunity for the long-term investors. Medplus had a year high of 1,143 and a year low of 995, currently trading around 1100 levels. Data Patterns is another company which came with an IPO. had a good and sound order book, consistent track record of profitability, scalable business model make this an attractive buy for investors. Company is expected to be a major participant in 1,500 crore worth of contracts over the next 3 years. At 585 per share, the company is commanding a 12 months price to earning ratio of 36 times, which is lower than multiples of MTAR and Astra Microbial. Anchor investors can sell their 5.8% stake in the stock from January 21. Any dip in the price should always be considered as a good opportunity to buy. Data pattern had a year high of 864 and a low of 702, currently trading around 770 levels. HP Adhesive had a good response, oversubscribed 21 times, QI bidder subscribed less than twice, HNI portion fetched 19 times, retail portion subscribed 81 times. The company manufactures a wide range of consumer adhesives and sealants such as PVC, CPVC, UPVC solvent, cement, synthetic rubber adhesive, PVA adhesive, silicone sealant, acrylic sealant, gasket, shellac, other sealants and PVC pipe lubricants. Company allocated 11.3% of its shares to anchor investors pre-IPO. The anchor portion lock-in ends on January 24. The scrip had a year high of 505 and a year low of 315. Supriya Lifesciences is an active pharma ingredients API, sold its shares at 275. It had made a debut at 425, a gain of 53% on its issue price of 274. The company has received positive reviews from analysts bullish on the API manufacturer. Competitive pricing, market leadership and growth prospects of the company are good. Anchor portion will end on January 24, after which investors can sell their stake of 14.3% in the company. Supriya Lifesciences had a year high of 527 and a low of 583, currently trading at 500 levels. CMS Info raised 1,100 crore via its IPO, selling in the range of 216 rupees. Issue received a very poor response from investors as it was overall subscribed less than 2 times. The stock is trading at an 8% premium to the IPO price. Anchor investors have 10.3% stake in the company, which can be sold when the anchor lock-in ends on January 28. CMS Info Systems is India's largest cash management company in terms of the number of ATM points and retail pickup points as of 31st March 2021. The scrip had a year high of 259 and a low of 215, currently trading at 240 levels. Any price correction below 225 should be considered as a good buy opportunity. This is the 12 issues we have covered where the anchor investor lock-in ends and there is an expected selling pressure from all these anchor investors. Anchor investors will be keen to book profits and buy at lower levels. This provides small investors an opportunity to buy the scrips on all declines. Thank you.